Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings, so you don't have to. Today we're diving into TREX Company's latest quarterly report, Form 10Q. And let me tell you, there are some interesting shifts happening in the world of composite decking. Before we crunch these numbers, if you love getting the real story behind company financials, make sure you hit that subscribe button right now. Also, we've got a thriving community over on Discord where we break down these reports even further. Link is in the description below. Alright, first up the basics. This is a standard quarterly report, but it covers the period ending June 30, 2025, giving us a mid-year snapshot of TREX's performance. Let's jump right into the heart of it, the financial tables. Starting with net sales for the 3 months ended June 30, 2025, TREX reported $387.8 million. This is up from $376.5 million in the same period last year. That's a 3% increase. Now looking at the first 6 months of the year, net sales came in at $727.8 million, down from $750.1 million in the first half of 2024. That's a 3% decrease. The company says this dip is due to a change in their inventory strategy and lower production levels in the first half of the year, which is a bit of a mixed signal. Sales are up for the quarter but down for the half. Let's talk gross profit. This is what's left after taking out the cost of making the products. For the quarter, gross profit was $158.1 million, but that's down from $68.1 million in the prior year. That's nearly a 6% drop in gross profit on a smaller sales increase. This brings us to the gross margin, which is gross profit as a percentage of net sales. For the quarter, it was 40.8%, down from 44.7% last year. The company blames this on lower production to level out their output inefficiencies from their new Arkansas facility and some production process changes they made. The good news is they expect these specific issues driving the margin down to not continue into the next quarter. Now let's look at selling general and administrative expenses, or SG&A, which are the costs of running the business like marketing and salaries. For the quarter, SG&A went up by about $4.5 million to $55.7 million. This is about 8.8% higher than last year. Mostly this increase comes from more spending on advertising and branding and a bit more in personnel costs, plus some startup costs for that new Arkansas facility. Let's check out the first 6 months for SG&A. It's a bigger jump here, $111.8 million, an increase of almost $10 million, or about 10% compared to last year. This also includes increases in branding personnel and those Arkansas startup costs, plus some digital transformation spending. Okay, let's talk EBITDA, which is an amortization, a bit of a mouthful, but it's a common way to measure a company's operating performance. For the quarter, EBITDA was $110.2 million, down from $130.4 million, down from $130.4 million the previous year. That's a drop of over 9%. For the 6-month period, EBITDA fell even more significantly from $263.5 million to $214.1 million, a decrease of over 18%. This drop in EBITDA really highlights the pressure on their profitability this year, mainly due to lower gross profit. Then of course, net income, which is the bottom line. For the quarter, net income was $75.9 million, down from $86.9 million, a decrease of almost 13%. The story is similar for the 6-month period. Net income was $136 million, a 22.6% drop. This really shows that despite a slight sales increase in the quarter, profitability took a notable hit compared to last year. Looking at stockholders' equity, we see the company's financial structure, common stock, and related accounts show changes related to stock compensation and employee plans, which is pretty standard for a company like TREX. An interesting note here is the product warranty section. TREX warrants its products against defects like splitting, splintering, rotting, and even pest damage. They have reserves set aside for these potential future claims. For the 6 months ended June 30, 2025, their product warranty reserve increased to about $19.2 million, while the surface flaking, specifically Hunt. For the 6 months ended June 30, 2025, their product warranty reserve increased to about $19.2 million, while the surface flaking, specifically. The company is investing heavily in its future capital expenditures. For the first 6 months of 2025 were $126.3 million. A big chunk of that, over $97 million, is going into that new Arkansas manufacturing facility. They also spent money on cost reduction and capacity expansion. TREX is clearly expanding its production capabilities. When we look at debt, TREX has a revolving credit facility with significant capacity. At June 30, 2025, they had $245.4 million borrowed under this facility with about 5.23%. They state they are in compliance with all their debt covenants, which is always good to see. TREX's overall strategy looks to be focused on expansion and maintaining its market leadership with new product lines and increased production capacity. However, the financial results for the first half of 2025 show some headwinds. The drop in gross profit and net income, despite modest sales growth, points to increased costs and some operational inefficiencies, namely with the new Arkansas facility. The company management believes these are temporary and are working to address them. Interestingly, TREX did not repurchase any shares of its common stock under its repurchase program. During the first 6 months of 2025, this could mean they are conserving cash for investments or perhaps saw less of an opportunity to buy back shares at what they considered a good price. There's also a mention of updated severance agreements for key executives, including Brian H. Fairbanks. This is a pretty standard disclosure for executive compensation and changes, but it shows the company is updating its employment contracts, which could signal changes in how they manage their leadership compensation structure. So my take on this report, TREX is a market leader with solid brand recognition, and they're making big investments for the future. However, the increased costs and resulting dip in profitability for the first half of 2025 are a concern. While the quarterly sales are up, the overall trend for the year so far shows challenges in managing expenses. The expectation that the margin issues are temporary is key. If they can execute on their expansion plans and control costs, TREX could rebound nicely, but for now there's pressure on their bottom line. What do you think about TREX's performance in the first half of 2025? Let me know your thoughts in the comments below. If you found this breakdown useful, give this video a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community for even more insights. Thanks for watching, and we'll see you next time.